Hey guys, Dave Keller here with Market Misbehavior. One of the first things I learned about investing was the catchphrase, buy low and sell high. Instead of thinking about, is this stock low enough to buy, I think the question you should be asking is this chart strong enough to buy? So a lot of times when people are just learning about investing, they're taught early on, buy low and sell high. It's a classic way of just thinking about essentially a value orientation. Buy when things are weaker than expected and sell when they're stronger than expected. You're essentially basically betting on a mean reversion, that things get really low and then they go higher and they get really high and then they get lower. And over really long time frames, what's called the business cycle or the economic cycle, that certainly is the case. And on very short-term time frames, that's actually the case as well, where stocks will sort of overshoot and undershoot their theoretical value, their implied value. But in the medium term, which is kind of the sweet spot for most investors, I would argue, particularly individual investors, it's actually the opposite. You generally want to be focusing on strength and buying stocks that are overall showing signs of growth as opposed to signs of weakness. Before we get to the charts, I'll show you exactly what I mean. If you like this sort of thinking about market history, investor psychology, and technical analysis, won't you subscribe to my channel? Also, give the video a like if you appreciate it. We'd very much appreciate that back. Put a comment below. Which of these two charts do you think is best set up for the next 1 to 3 months and why? Now, we're looking at a chart of DISH Network. I was trying to come up with an example of a stock in a pretty consistent downtrend. I immediately thought of the communications services sector, which has been one of the worst performers in the last 12 months. And I focused in on DISH Network because it's making a new 52-week low again as we're shooting this episode at the end of February of 2023. Now, what does this chart tell you? Well, I was taught that price goes up and price goes down for a reason. Instead of thinking of a stock going lower and lower as becoming more and more attractive, what I was taught and what I learned over time through some painful misses early in my career was that the prices going lower is actually a sign of price deterioration. It's a sign that investors are not really excited about owning the stock, and that's not where big solid gains tend to start. Well, I was taught to be patient and look for signs of accumulation, look for signs that the chart is improving. So when you think about it, instead of buy low and sell high, you want to think about buy strength and sell weakness. It's a different way of thinking, but it's focusing on the trend in the chart, not the level of the chart. Here's what I mean. I mentioned earlier on, DISH Network is making a new 52-week low today. But look back over the last 2 years and count how many times, how many days you could have said that same thing. How many times did it make a new 52-week low before the one that it just had? Well, first off, yesterday, and then about a week ago. And a week before that, you can see all these times where the price makes a new 52-week low. So that doesn't just happen, and then all of a sudden the price goes higher. That does happen occasionally, but more often than not, when a stock is going lower, it usually tells you something is wrong, right? So the first time we actually made a new big low was back here. Look, in November of 2021. We broke below the 200-day moving average, a big sell-off, breaking below the last 6 months of price action, and that was just the beginning. Look at how many times we've made a new low before the one that we're just focusing on here. Now, what are the other characteristics of what I would describe as a fairly bearish chart? The price is going lower. The price is below 2 downward sloping moving averages. The relative strength, which is at the very bottom, is going consistently downwards, which means not only is the price going down, but you're underperforming the S&P 500. So not only are you losing money on an absolute basis, you're doing worse than if you owned just the S&P 500, just parked in an index fund and didn't even think about individual stocks. The momentum characteristics are also pretty negative. Look at how the RSI never really gets up to that overbought region. The RSI usually stalls out around 60, and that's usually the sign of a chart in the long-term downtrend. Now, if you flip everything I just said over, you get some steel names. Steel is actually one of the stronger groups that you're seeing if you look back over the last 6 to 12 months. Steel Dynamics is a large cap name in this space. Look at how the price is kind of doing everything that DISH Network is not. Instead of making consistent new 52-week lows, here we're making consistently new 52-week highs. And it's not just the one that we saw in February. You can see that it's happened a number of times. Again, look left on the chart and count how many times we've made new 52-week highs. So again, part of me dies when someone says, when DISH Networks breaks to a new 52-week low, and I'm asked, is that low enough? Should I buy? Same thing when something breaks out to a new high and I'm asked, Did I miss it? Should I not own Steel Dynamics? And my comment in both of these cases is if it's broken down, that tells you something's wrong. When it's breaking out, that actually tells you something's good, right? Because buyers are willing to step up and pay more for the stock than they have in quite some time. So the new highs that we've seen over the last couple weeks in Steel Dynamics are just the latest new highs out of a number of them that we've seen over the last couple years. Look at how the momentum characteristics are overall fairly strong. We rarely get below an RSI of 40 because the entire range moves up because the entire momentum is strong. Look at the consistently positive relative strength going from bottom left to upper right. So in general, when I look at a chart like this, you think of it, or I think of it as a long and strong up and to the right type of chart. That's how I would literally describe this. And what that means is it's not just that it's going up today, but that today is the latest move within a longer term trend of an upward phase. So again, if there's anything I hope you take away from this particular video, it's to unwind, if you could, that sort of trading maxim, buy low and sell high. That is actually good on very short-term timeframes, and it's very good on multi-year, sort of longer timeframes, like the business cycle or the economic cycle. But if you're looking at sort of that, 3 to 5, even 3 to 5 weeks, or even longer, 1 to 3 months and further time frame, you're actually much better off following strength and buying things that are working and selling things that are not working, because strength tends to beget further strength and weakness tends to beget further weakness. I hope this video was helpful, sort of illustrating the classic bullish chart and the classic bearish chart, focusing on DISH Network as an example of a consistent bearish pattern, Steel Dynamics and Steel Names as an example of a fairly consistently strong pattern. In general, if you're a medium long-term investor, it's better off usually focusing on areas of the market that are showing strength, particularly in periods of market uncertainty like we're experiencing here in the first quarter of 2023. I hope you'll subscribe to my channel if you want more videos thinking about this sort of market analysis, market history, and technical research. And don't forget to leave a comment. Which of those two charts do you think is better suited over the next 1 to 3 months, and why? Let me know in the comments below. For Market Misbehavior, I'm Dave Keller. Be well, be safe. Bye now.